Hello everyone, welcome back to my channel. In today's video, I will talk about time to add gold to your investment portfolio. I will go over with you why it is the time to add gold, why gold can add stability to anyone's investment portfolio. And I will answer the question, can you earn any dividends from gold investing? There are many gold ETF, and gold miners out there. Which one to choose? Most importantly, I will share with you my research results, stock chart, to show you which gold security you might want to add to your investment portfolio. For those of you who are new to my channel, this channel is about easy wealth building. I am both a long-term dividend stock investor and a short-term stock trader. I trade stock very frequently when market open. Each week, I will produce 2 to 3 videos to share my knowledge and experiences in the stock market. I'm in the process of making series of videos that will help investors to stick their heads above the water in this stock market sell-off environment. I already made one video titled How to Trade to Win When Market Sell-Off. You can find the link in my description part. You may consider to subscribe and hit that notification bell so you will not miss any videos in the future. Without any further ado, let's dive right in. Why it is the time to add gold to your investment portfolio? We have already experienced such a market turmoil since February the 24th. Oil future tumbled 31% over the night on Sunday. It is the sharpest decline since Gulf War in 1991. Japan's stock market dropped more than 3%. Australia shares also plummeted 5% amid oil price war. 10-year Treasury yield also plunges below 0.5%. Futures on Dow Jones Industrial Average plunges 1,076 points. It points to a more than 1,100 point loss at Monday's open. As you can see, we're in the world full of negativities and geopolitical crisis. The stock market reacts to this kind of turmoil only by one solution, that is crash. And then we cannot even predict how long that market crash gonna last. Gold, on the other hand, historically is always recommended by most financial planners to be part of your asset allocation to shield your portfolio, at least to some extent, from the market crash, when other investment classes may be under big stress. In August 2017, Ray Dalio of Bridgewater Associates LP, the biggest hedge fund in the world, he recommended investors to hold 5 to 10% of their portfolios in gold to hedge against the political risks. He said, gold serves as a purpose. It is first of all a diversify against other assets. So that comes to our question, why gold adds stability to a portfolio? Cameron Kress, a macro strategist who writes Bloomberg's Macro Man column, he conducted a very interesting research on this topic. Is gold really an effective hedge in periods of risk? In his research, Cameron Kress identified 10 notable episodes of risk aversion over the past 3 decades. The 10 crisis episodes he used in his research was 1987 crash, Iraq invades Kuwait, Asia crisis, Russia long-term capital management crisis, September 11, global financial crisis, 2010 Eurozone crisis and then flash crash, US Soviet debt downgrade, temper tantrum, China worries. Then he used the S&P 500, US Treasuries, and gold performance during those 10 crisis episodes. Equity market performance was obviously very poor during this crisis, with an average loss of 19.6% per episode and a negative in each instance. Treasuries returned an average of 3.4% and performed positively on 7 occasions. Gold, meanwhile, rose by 6.9% on average per episode, with gains in 8 of the 10 periods. Historical evidence supports the hypothesis that gold offers solid protection from asset market dislocation in recent times. So here, to answer your question, can you really earn dividends from gold investing? The quick answer is it depends, because some securities do offer dividends, some don't. So now is the moment of truth. Gold ETF, gold miners, which one to choose? I come up with these 4 names: NEM, JNUG, Gold, GOLD, and Gold, GLD. JNUG is a ETF. That is Daily Gold Miners Index Bull 3 times shares ETF. It's for trading. It's not good for holding, because although the yield is 1.03%, look at this total 5-year return compared to S&P 500. S&P 500 in 5 years return is 58.91% as a benchmark I always use when I select stocks or securities. JNUG is minus 67.53. The dividend payout, the record shows, is very poor. 2014, although it is a quarterly paying, in 2014 it only paid out 2 times. 2017, 1 time. 2018, 1 time. 2019, only 2 times. Immediately, I will eliminate this for long-term holding, but it is good for short-term trading, daily trading. There are large groups of people out there. They trade daily, either JNUG or JDST, because depend on the gold prices, and then it's always you can find some value when you're trading that. GLD, on the other hand, it doesn't offer any dividend. GLD, amongst these 4 securities, it has the highest share price, $157.55. But look at this total return in 5 years compared to S&P 500 is lower. It's 40.85%. So I will personally rule out this one immediately, because as a dividend investor, that doesn't make really sense to me for holding long time, because I don't get dividends. So that comes down to only 2 gold miner. But look at the 5-year return difference. Although GOLD has very good return, 96.62%, but look at this, NEM is 104.12% total return. Total return including the price performance as well as the yield, percentage of the yield. Both payout ratio are similar, and 28.34% versus 26.82%. Dividend growth is a big difference here. GOLD has negative dividend growth in 4 years, which means they reduced the dividend growth, while NEM increased the dividend growth, 45.59% dividend growth within the recent 4 years. The PE ratio is similar, 26.49 versus 28.47%. And also by looking at the gross profit margin, GOLD has 29.44%. NEM has 44.94%. So NEM actually is making more money than GOLD. Return on equity though, GOLD has 23.33%. NEM has a little bit less, 14.42%. Revenue growth year over year, GOLD and then NEM is virtually similar or very similar. GOLD is 34.16% and NEM is 34.29%. I will choose NEM at this point of time. From dividend paying history point of view, GOLD is not as good as NEM. GOLD from 2014 to 2018, the total payout was 5 times per year, but 2019 reduced to only 3 times per year. That probably explains why this dividend growth is this much in negative territory. NEM, in comparison, 2019 had a 5 times payout. One additional payout, they pay out big, 88 cents versus regular 14 cents. So look at the dividend paying history. I will personally choose MEM over GOLD. Now let's look at a chart for both GOLD and NEM. If you notice, the stock price for GOLD is almost half of what is for NEM. It's $21.30 per share versus $52.31 for NEM. Let's look at a chart for NEM for now. All right, this is a 6-month daily chart. One candle represents 1 day. Look at this impressive recovery. It's like a V shape from the market crash in February. If I put in a line, you can see V shape very clearly is a V-shaped recovery. This is a beautiful, most beautiful chart you can find in the whole stock market right now. And the most impressive thing here, I want you to notice that on ex-dividend day, which is this day, March the 4th, it's ex-dividend day. Usually all the stocks price will coming down because it compensates the dividend that the company will pay you. However, on that day, the stock price, instead of going down, it pushes up. It's a strong hammer candle, if you notice, all right? And then it's still pushing up. So it's a very bullish trend for NEM from the chart point of view. And it is still going up. You see also not only the RSI pushing up, even the volume going up. All right, so it's not just price going up, even the volume is going up. It's a strong support for showing the bullish sign for this. So as the MACD and the momentum, everything is going up for this NEM. Very popular now. For GOLD, look at the chart. This is also a beautiful chart, but not as strong as NEM. You can see two red candles in the recovery part, and it's not as that much V, but it is still a V. But a big difference I want you to notice is this ex-dividend day, the stock price did go down. It could be coincidence with the market crash that day, but it's also true with almost all dividend payout stocks. On the ex-dividend day, it will always coming down to compensate the dividend that pay you. I just noticed that they increased the dividend paying for GOLD. It increased to 1.32%. On the chart I showed you before, it was 0.94%. So for that point of view, maybe some people will choose GOLD versus NEM. Hey, it doesn't matter which one you choose. You can choose both if you like to, but both of them are very strong. And then you can see the RSI is going uptrend, and then volume is holding very high too. This concludes my today's video. I just noticed that the Dow Jones future plummeted about 1,200 points. So tomorrow morning will be a bloodbath again. As time of this recording, I just hope everyone will have some gold components in their portfolio to weather this huge storm from the stock market. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.